Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous?
New week, new opportunities. Welcome to Modern Investing Techniques, episode 46. I'm Patrick in Vancouver. Today is May 18th, 2026. Monday means fresh setups. Let's break down the week ahead and find our edge. Quick reminder, everything we discuss here is for education and entertainment. The practice investment of the day uses simulated trades with no real money. I'm not a licensed financial advisor, and this isn't financial advice. Always do your own research before putting real money to work. Canadian TFSA holders eyeing healthcare innovation now have fresh catalyst data to evaluate after Design Therapeutics reported positive trial results that could shift sector rotation away from pure AI names. Markets opened lower, with the S&P 500 at 7,408, down 1.2%. The NASDAQ Composite sits at 26,225, off 1.5%. The TSX Composite checks in at 33,833, lower by 1.3%. Sentiment reflects ongoing rotation out of broad tech into selective healthcare and energy names amid geopolitical oil pressure. Our simulated portfolio shows a cumulative return of negative $4.66 across 20 trades, with an average return per trade of negative 0.02%. producing negative alpha versus the NASDAQ decline. Investors should watch for volume confirmation on any rebound attempts and how Canadian portfolios handle the CAD-USD cross amid US index weakness. Proxy battles between founders and boards offer retail investors a window into governance risk that can create both volatility and opportunity. Lululemon's public response to Chip Wilson's campaign frames the annual meeting vote as a choice between misguided founder influence and current management strategy. This setup rewards investors who track shareholder letters and proxy filings for signals on board stability before earnings. The approach works best when ownership concentration is high and activist stakes exceed 5%, allowing position sizing around the vote date rather than after the fact. Risks include sudden settlement announcements that erase volatility premiums. Use your broker's proxy alert tools and review the latest 8K or management information circular on SADAR Plus or EDGAR within 48 hours of release. This discipline around governance signals connects directly to how index funds have quietly reshaped market mechanics over the past 2 decades. Disclaimer: this is a simulated trade for educational purposes only. No real money is involved. This is not financial advice. Today's practice investment pick is Design Therapeutics, ticker DSGN, a biotech developer listed on the NASDAQ. The strategy centers on a catalyst-driven entry after positive clinical trial data, with a volume confirmation requirement. We will hold from Monday through Friday this week. The technical setup calls for monitoring a close above the 20-day moving average, accompanied by volume that exceeds the 20-day average. Near support sits near recent lows, while we set a stop loss at 10% below entry to cap downside from clinical setbacks or sector rotation. The target range runs from 4% to 8% over the week if momentum holds. Confidence sits at medium because the data catalyst looks strong, yet broader market rotation and modest volume history add uncertainty. This trade demonstrates how to quantify a binary clinical catalyst against required volume confirmation before committing capital. Yesterday's simulated weekly hold was ACM, an infrastructure consulting name that announced a multi-year contract win. We entered at $80.09 on Monday open and exited at $71 on Friday close. The result was a loss of 11.35%, or $113.50 on a $1,000 position. The trade produced negative alpha of roughly 9.85%, while the NASDAQ declined about 1.5% over the same window. The infrastructure contract provided clear multi-year visibility, yet failed to protect against broader market rotation into pure AI names. The lesson is that we must always require volume confirmation above the 20-day average before entering momentum trades on earnings beats. Benzinga stock screeners let you filter for aerospace and defense names using sector and performance rankings to surface candidates with strong order backlog visibility. The tool updates intraday and lets users set alerts for volume spikes above the 20-day average, giving Canadian investors a fast way to scan U.S. defense exposure without building custom queries. Best suited for intermediate users who already hold sector ETFs and want to add single names. The Benzinga 5G penny stock scanner lets you run the 5G penny stock list through your existing watch list to identify names with upcoming spectrum auctions or carrier contracts. The edge comes from the daily refresh that highlights liquidity and news catalysts before they hit mainstream scanners, suitable for risk-tolerant TFSA accounts under $50,000 that can handle higher volatility. Berkshire Hathaway added a $2.6 billion Delta Airlines stake and increased its Alphabet position by 224%. This signals renewed conviction in travel and AI infrastructure, so consider adding DAL to your watch list for any post-announcement pullback below the 50-day moving average. Artivion closed its $175 million purchase of Endospan following FDA approval of the Nexus aortic arch system. The move expands its cardiovascular portfolio, so review AORT position sizing if you already hold healthcare ETFs and consider trimming if exposure exceeds 8% of the portfolio. Alaska LNG secured a long-term gas feedstock supply deal with ConocoPhillips. The agreement improves visibility for North American LNG export capacity, so add energy infrastructure ETFs to your monthly rebalancing review if oil remains above recent support levels. BitGet completed SAT and UIF regulatory registrations in Mexico. The exchange opened a regulated path into the Mexican virtual asset market, so limit new crypto exchange exposure to platforms with similar regulatory filings until custody risk metrics improve. Our simulated portfolio across 20 trades now shows 11 wins, 8 losses, and 1 break-even for a 55% win rate. Cumulative profit and loss stands at negative $4.66 with an average return per trade of negative 0.02%. The best trade delivered 13.36%, while the worst came in at negative 11.35%, and we are currently on a 1-trade losing streak. The AI analysis continues learning from sector rotation patterns and is adjusting entry filters accordingly. Imagine you bought a broad market ETF last week when the NASDAQ dipped 1.5%. Your order filled at the closing NAV. But what actually happened between your click and that price was a silent auction among authorized participants who arbitrage any premium or discount to the underlying basket in real time. The mechanism keeps tracking error under 0.05% for most S&P 500 ETFs, because creation and redemption units of 50,000 shares force market makers to keep the ETF price within a few basis points of fair value. What most retail investors do not realize is that this same mechanism is why active mutual funds with 2% or higher MERs have delivered negative alpha versus the index in 85% of rolling 10-year periods after fees. The professionals always check the ETF's premium and discount history on the exchange website before allocating, because even a 0.3% persistent premium compounds into meaningful drag over a decade. The biggest mistake with index investing is assuming set and forget means ignoring costs entirely. Instead, always compare the ETF's expense ratio and bid-ask spread against the mutual fund alternative in the same asset class before committing capital. Before we wrap, open your brokerage screener this week, set the volume filter above the 20-day average, and run it on the healthcare sector. Flag any names that also show positive clinical or regulatory news in the last 48 hours and note the top 3 for further review. Tomorrow, I will highlight one energy infrastructure name showing unusual volume buildup ahead of contract news. That's modern investing techniques for today. If you found this useful, share it with a fellow investor and subscribe wherever you listen. Check the resources page for tools and platforms we discussed. We're back tomorrow. Keep learning, keep investing. This episode used AI voice synthesis of my voice. Editorial selection and analysis are my own.
Do you ever wonder where we go after this? Are you high right now? Do you ever get nervous? Do you ever stay awake, counting sheep like all the time? What's your life like? What's your purpose? When's your birthday? What's your sign? Are you down right now? Are you stuck up in the past? Are you still thinking about all the times that you didn't laugh?